Hello traders, good morning, this is Yanis. We are going to have a look at next week's suggestions for you to be traded, always using the same pairs we had last week: the euro dollar, the pound dollar, the dollar Swiss, the dollar yen, the Aussie dollar, the dollar CAD, and last but not least, gold. We saw in the previous recording how the previous week went. We did a quick recap. For those of you who haven't seen that recording, please do so. It's extremely important and it explains precisely what happened and why. So without any further delays, let's get down to the new week's suggestions that we have for those particular pairs. Starting with the euro dollar, we are looking at the weekly chart on the euro dollar pair, and what we see is that the week closed extremely powerful with very big green bar. However, that very big green bar didn't or couldn't close above the previous highs, and still remains below the 200 moving average on the euro dollar, which is extremely important because that constitutes a very important and difficult obstacle for the pair to overcome. Despite the fact that obviously the NFP release last Friday was extremely strong. We had new jobs about 3 times over the actual estimation, and when we do have that kind of differences to the upside, we should have seen the dollar rising. However, that didn't happen because other things took counterpart of that excellent release for the dollar, like the ECB, the European Central Bank, announced that the jobless was the jobs lost was down to 7%. We also had the Bank of England, which raised the interest rates, and we know that all those news have a very important impact on how the price and the pairs move. So despite the fact that the dollar was very strong coming from NFP, didn't manage to show that all over the board, and this is why we had a very strong week and end of week for the euro dollar. So the bias for upcoming week for the euro is still remains bullish. However, like I said, we are entering very important and very strong resistance levels. Dropping down to the daily, you can see that we do have that double top from previous month, and right now we are in that purple area, which will be quite difficult for the euro to break. Here we can see the very bullish week that we had for the past week, and dropping down to our trading time frame, the 4-hour time frame, this is what I'm seeing right now. So that purple area is the area of interest, obviously, because like we said, it's very difficult. It will be difficult to break, but not impossible. That depends if the bulls at the opening of the market on Monday will have the will and the power to overcome that resistance area, in which case they will push the price higher. That can be one of the scenarios. So a breakout on Monday, early Monday, can signal the start of a new leg to the upside. However, because I'm kind of expecting some reaction more than what we are looking at right now, for me, ideally, I would like to buy that long at a cheaper price. So I would like to see furthermore price getting to the downside, having slightly bigger retracement, and this is where the 200 and the 20 moving average will be found together as a support before allowing price to drop, to move back further up and for me ideally right here at that level. Okay, so that will be the move that I'm expecting. However, we might see directly a move to the upside with any kind of break here. Price may go back up, break, use that level as a support and then continue further up. That's also a scenario that can be played out. Sorry, come on. Okay, so that can be a scenario that can also play out. For me, I would like to buy here. That will give me a much better win to reward ratio, somewhere around 1.5. Okay, and my target, I don't want to be greedy, would be a few pips below my next resistance area. In that case, I would use my stop loss here below that other purple line, which is an intraday or a daily support. Okay, and this is for me the play that I see for the euro upcoming week. Obviously, because like I said, we are in a very important area of resistance right now. If the bulls cannot manage to break that resistance somehow early this week, then we may also be facing another retracement to the downside. And in that case, this is why I have planned another scenario, a short one. For me, if price comes back down here and do not rebound on that line and goes further back down, then if my entry point is retested and I do have a candle that will be bearish, engulfing the previous bullish candles here on the way up. So ideally for me, what I would like to see is this. Okay, and from here, go back to my move back down, but only if I see a bearish candle engulfing the previous bullish candles here on that small retracement. Okay, so that would be another scenario valid for me for upcoming trading week. Not sure at what day of the week we may see or may not see that short scenario, but I'm always on my guards and I have my eyes on that one as well. So moving up to the pound dollar, for me the pound dollar scenario at that level, getting back down to the weekly time frame, what do we have? Okay, we are clearly in a down move. The structure is bearish. We are making lower highs and also lower lows, and we are in that downtrend channel. Most of you remember it. I have it. This is the same picture that we are looking, the same chart from many weeks ago when we began our analysis on those pairs. So we are clearly in a downtrend, in a down channel. You see the bears managed to reverse that uptrend here, and yet again another move to the uptrend. Sorry. Here, but the week ended up with a pin bar or a topping tail. And for me, despite the fact that we are above the 20 moving average here on the daily, on the weekly, sorry, and above the 200, however, we are still in a bearish momentum. And dropping down to the daily time frame, we can see what I said previously. The daily was capped by the 200 moving average. And from that point, we are again resuming that downtrend. We did have a move up somewhere close to that descending, the upper trend line of the descending channel. And then on Friday, the bears almost engulfed the previous candle and closed below it. So for me, the entry short would be here. My first target would be around 133.50-ish. Okay, and my stop loss for that entry, let me drop down to the 4 hour, it's a bit clearer. So yes, this is the 4 hour. This is where the two moving averages are joined together, and this is where anything can happen. However, like I said, my bias is short for the moment. I'm kind of expecting that reaction to the downside to continue. And for me, if I have a break of the previous lows somewhere here, that would be immediately my entry short with a target either a bit higher than what I have it right now, or you can try to go for close to 2% risk to reward to a ratio of 2 risk to reward ratio, and hit a bit lower than the previous lows. So for me, that will be the play that I'm looking for Monday. Okay, my stop loss would be relatively close. I really don't like that too much. I could have used that one, and that would give me, as you can see, a perfect ratio of 1. But I'm looking at something more for that trade. So this is why, despite the fact that I'm always telling you to use the stops that make sense and not the ones that you can afford. However, I'd like to have that one as a close one, because in any case, if my stop is hit, unless that's a week, that would mean that price may negotiate above the moving average, and in that case, that would then validate my long scenario, which would be an immediate entry long above the previous highs, with my stops here below the previous lows. Okay, and my target in that second scenario would be in the whereabouts of 138 for the pound dollar. Okay, so I'm looking at both ways to play that pair. My first option and my bias, my favorite right now, would be to short it on a break of the previous lows, but I'll have my eyes on it, and in case that my stop loss, and this is why I'm using a relatively close stop loss for my personal use, because in that case I would then start talking and thinking about the long position, and this is why I want to keep things a bit tighter on the pound dollar. We're going next to the dollar Swiss. The dollar Swiss is in an uptrend. Let's see the bigger picture on the weekly time frame. Okay, we do have right now, the past weeks and months, a structure, an ascending structure, making higher highs and higher lows, sorry. Okay, and right now we are in that kind of ascending trend channel. Even if that area here looks more as a sideways, we are still managing to make higher lows. So for me, I'm still looking at the big picture. I'm still in an uptrend. Dropping down to the daily time frame, we can see that, where's the daily? Is here. We can see that we are having that mess. For me, it's a mess. These candles are very difficult to play and to trade, actually. However, keeping the big picture in your mind, you shouldn't be trading short, okay? And that's what we are doing, and this is one of the ways that we are using to avoid losses, back-to-back losses, okay? The overall picture is the one guiding everything. So if the overall picture is even slightly in an uptrend, then immediately in your mind, you should dismiss any kind of short, unless you're trading very short time frames. And in that case, eventually, yes, I understand, you could intraday look for those moves from the rejection of the 20 here to the 200 as a target, taken from the daily, but you drop down to the hourly, for example, or the 15 minutes, okay? And you can play the same. Whatever we are saying and talking and trying to make you guys learn and understand, the use of the moving averages or the areas of support and resistance remains valid on all time frames. Obviously, on the higher ones, it has much more impact and much more importance, but still the concepts remain on any kind of time frame you guys want to trade. So the bigger picture on the dollar Swiss remains in a slight uptrend because of the higher lows mostly, okay? But we do also keep in mind that this picture here, the image that we're having on the daily, is not the best possible one, and for that we are keeping our eyes on everything. However, my personal bias for upcoming trading week remains bullish for the dollar Swiss. Dropping down now to our trading time frame, the 4-hour time frame. We do have some weird areas, some channels and some trend lines that have served their purposes, but I didn't want to take them off yet. As you can see, this one, for example, on the 4-hour has been respected dramatically. And as soon as this one, the descending line, has been broken, then it has been retested and we are still hovering around and above it. So right now for me, from that picture and the fact that the structure of the pound dollar on the 4-hour remains bullish, higher highs than the previous ones, higher lows than the previous ones again. So my bias would be to long that pair, not for very much. This is a bit optimistic, but that can play out as your last target eventually. Okay, you're not obliged to go to the targets that I'm setting, and sometimes I don't go till there. I'm covering earlier, but in that case, that's within the week. So right now we had that very important bullish bar here closing above those previous highs. Okay, and the pair remains in a bullish mode. So for me, it would be an immediate entry as the market opens on Monday. My first target, to tell you the truth, would be somewhere around here. Okay, not as a first target, but when price will reach that level, I will have my eyes on that pair very closely, eventually dropping down to the hourly to see how everything moves on. However, to me, that would be only an intermediate target. If I'm looking at some candlestick patterns that allow me to push further up my position, then I will aim for my final target. Okay, so that would be my entry long on the dollars, on the dollar Swiss. That will be my personal prediction for Monday. Okay, and in that case, my stop loss would be below those lows. Right now, I'm not considering any short position, even as an alternative scenario. Even if price doesn't materialize, if I'm losing that trade or whatever happens, I'm not looking for a short on the dollar Swiss unless we drop below the 0.91 mark. Okay, anything inside here will be just noise and sideways move. So even if that trade is lost, I won't be looking for a short at that time. Moving further into our analysis to the dollar yen. The dollar yen for me right now remains equally bullish. It's like the dollar Swiss. The pairs have a lot of similarities. Okay, we do have, let me switch to the weekly time frame to have the big picture. Okay, we are obviously in a very important uptrend, up move for now almost a year and a half, close to a year and a half. Okay, as soon as price on the weekly managed to test and retest the 200 moving average and then supported by the 20 moving average all the way up, it was there was only one direction for the dollar yen, which was up. Okay, and then we identified that ascending trend line here in the way that I'm using that, and as you see, we did have a retracement which created a very important support area here around 112.90 before price moving up and almost touching the resistance area that we had already identified from the previous high. So on the big picture for the dollar yen is clearly bullish, at least for the moment. I wouldn't consider anything bearish unless we drop below 113.70. Okay, so unless we drop below that level here. Going to the daily, what do we have? We have that ascending structure, higher lows, higher highs. So the pair remains in a healthy uptrend with decent and expected pullbacks to the levels that are already identified. There are no real surprises. Price dropped back down, pierced through the 20, rebounded here on that very important resistance area, moved back up, retested with a doji, with a topping tail candlestick, retraced a bit more, and then managed to push higher than the previous lows. Okay, it closed higher. Now we are looking at another retracement. This creates a new base of support here. Okay, and we are looking at the next uptrend. However, because now we did make a lower high, okay, we need to be cautious. The structure is still in an uptrend, higher lows and higher highs. Now we didn't create here a lower low, okay, it's still a higher low compared to the previous one, but we didn't manage either to push above or get close to the previous high. So we need to be cautious, because that can be the start from that point here to where we are now. That can be the start of a descending, of a bearish structure, which would create lower highs. And we are at that point. We are seeing the first lower high, okay? But we haven't seen any lower low. So that would happen somewhere here, okay? Even that can be on the daily a retracement. But I'm just trying to make you understand the way you should be thinking about the structure, the market structure for the pairs. So dropping down to our trading time frame, the 4-hour time frame, this is what I'm looking for. Okay, we did have that push above the 20 moving average, above that previous and important resistance area, and now that area is retested. So here comes again what I was telling you about the structure. Okay, we are dropping on the 4-hour, and now we start seeing again a bearish structure. Okay, remember, from the bigger picture that we are using, the weekly, but also from the daily, we still remain in an intact uptrend. Okay, however, because every change and every change of direction happens always from the smaller time frames, we need to be aware of that. And right now on my trading time frame, the 4-hour, I'm looking at a structure which seems to be making lower highs. Okay, so unless that low is broken, I'm still minded towards a bullish trade. But if that low is broken, and this is why I'm preparing already my short scenario, if I do have a close decisively below my previous low, then I would have a lower high and then a lower low somewhere here. And this is where I want to try my short, okay, which can provide me with an excellent risk to reward ratio. Although here I'm using a 1-to-1, but at that time, if my trade triggers, I might go slightly lower with my stop loss and get a better odd for my target. Okay, but still at that point, early morning on Monday, I would be looking at a long for the dollar yen. I would be waiting for a retracement here where we have the connection of the two moving averages, the convergence of the two moving averages, the 200 and the 20. Okay, and this would be after looking at that trend down again in the very same way I'm always doing. I would be expecting price to get back down, okay, and then get back up, closing above that level here. That would be for me the indication to go long. Okay, so I would like to see that retracement. I would like to see then an engulfing bullish bar taking out the few reds on the left, and this would be my entry for my long position, hopefully keeping my eyes on the previous highs, okay, but hopefully thinking that it would go to my target, which is somewhere close to those previous highs, slightly lower than that. In that case, sorry, that my long materializes, then my stop would be below the previous lows, okay, and my target would be in the whereabouts of 116.30. If that doesn't materialize the way that I'm planning it, then I have my next option. That would be shorting the pair, at least try to short it. I'm kind of thinking that that can also react, creating a third attempt here. But because we had that first attempt after that high at 116.30, and this is why this is my preferred target for that long. Okay, so we had that high here at 116.30. We had that low here at 113.60. We had a push up, a second retest, a push higher, but not above that previous high. So if that lower highs here continues to materialize, that would be the third touch of that support, of that resistance. And not having higher highs would make me think that that resistance finally will break. And this is why my target is on the next level around 112.90. Okay, I'm just explaining how I'm thinking, hoping that can give you guys ideas. So my first choice for the dollar yen is long, waiting for a small retracement, a rebound on the moving averages on the 4 hour, eventually on my base here and my ascending trend line, and then pushing further up, smashing the previous highs, and then heading for my target. If that doesn't materialize, I will be willing to look for a short eventually, a small time short. Once the lows have been broken and I have a close below those lows, then I would be aiming for my target here. Then we move to the Aussie dollar. Okay, the Aussie dollar for me remains bearish for upcoming week. We saw that we are in a downtrend. The pair rebounded here on that resistance area, managed to get back to those previous lows. Okay, we had identified that area here in the purple, the light purple. Now that area becomes more important, and this is why I redrew it using the darker purple color. Okay, so right now we have two very important areas to look for. One is this one, and the second one is the one that we are currently. Okay, those candles here have created a base of support. Now we need to wait to see if price will be indeed supported or if the bears will take control, because they do have the power. We are looking at lower highs and lower lows at the same time, and in that case I would be willing to short that pair on the close below the previous lows, assuming that I have a bearish candle closing below. In that case, my stop loss would be somewhere above my 20 moving average, okay, which right now is here, but if that short materializes, then the 20 will drop further below, and my target would be the next stop. Yes, I will have my eyes on those levels here, the previous lows, as we may have a rebound there, okay? But in no case that's not a concern, a real concern, because I know that I would be already in a positive trade. So this is why I'm willing to negotiate my targets. I'm rarely to never negotiating my stops, but I'm negotiating my targets eventually depending on price action. Okay, so that's my favorite scenario right now for the Aussie dollar. I'm also looking at a bullish scenario, which I have set up here. Okay, in case that price rebounds and closes, again, I'm repeating, closes decisively above those previous highs, then I will wait for a retest of those highs and then a bullish candle which will validate my long position and initiate my long position. In that case, my stop loss would be below the previous low and my target would be close to the previous highs here around 73.15. Eventually to the next area of resistance or that descending trend line. Okay, so I'm here also looking at both potential scenarios, favoring the first one, which is the short for the time being. Moving further to the dollar CAD, let's have a look at the dollar CAD bigger picture. Okay, so the dollar CAD right now, it's a weird pair, and the reason why it's a weird pair is this. We have the results on the dollar, the financial results, the financial indexes from the news, from the fundamentals, which are good. At least the numbers are showing that the American economy is doing better than it was 6 months ago. Okay. At the same time, we also have the price of oil, which is sky high and is reaching even new highs day after day. And as many or most of you should know or should know, the CAD pairs are driven by the price of the oil. So having a high price in oil gives a lot of strength and power to the Canadian dollar. So we are right now with the USD CAD, we are having both counterparts, both the dollar and the Canadian dollar, strengthening. Okay, and this is why that's weird. Usually both things do not happen at the same time, but we do have that right now. And as you can see, we are making higher highs and higher lows on the USD CAD, and that gives the dollar at the end the upper hand. Okay, and this is why I'm kind of torn about that pair, and the reason is because the bigger picture still remains bullish. However, you will see that dropping down to the daily, okay, we are in a mess. We are in a sideways move with lower lows compared to the previous one, highs that didn't close above, so we don't have higher highs. Okay, but we can't really say that we have lower highs as well, except if eventually for the level where we are right now, where if it rebounds on the downside to the downside, then we would be making also lower highs. Okay, so it's kind of in a sideways movement. I'm not very keen right now into trading that pair, and this is why I have two scenarios. So let's go and see what I would like to see on both of them. Okay, so if we manage to break above that resistance area in purple, in light purple, then I would be waiting not for an immediate entry, okay, if we manage to break above, but I would be waiting for a retest of that area. And then if I do see a bullish candle moving further up, okay, then I would be willing to take, that long, okay, to the upside, in which case my target would be around 130, okay, and my stop loss would be below the previous lows here. That can give me a risk to reward ratio of 1.1, not the best possible, but I mean, it is what it is. That is one of the scenarios that I would play if it shows up. Now, the next scenario, and to tell you the truth, I'm more inclined to that one right now, but I will have to wait the beginning of the week to see how price and the conditions will be handled. Okay, my personal preference would be to see the short trade scenario. In that case, I would be waiting for price from where it stands here, eventually a rebound of that area, to come back down, go below that area, okay, come back up to retest it. And again, if I can see a bearish candle taking out the previous green candles of that retracement here, then I would validate and enter my short. And in that case, my target would be somewhere in the whereabouts of 125. And my stop loss would be slightly above. Probably this one would be adjusted if all that happens this way. I'm planning it. Okay, the moving averages, both the 200 and the 20, will be close to that area. So my stop loss would be slightly above it. And that's, like I said, that's the scenario given the overall picture that I'm most looking for. However, keep in mind that the dollar CAD is difficult right now, okay? We'll see how it plays out, and we'll see it on the evaluation that we will do next week for this week for those predictions and preferences. And last but not least, let's have a look at gold. The big picture for gold on the weekly remains bearish, okay, and that's one of the reasons why I'm extremely bearish for gold still at that time. We do have lower highs and lower lows. However, dropping now down to the daily, we are again in some kind of mess, okay? Price is going nowhere, gold is going nowhere, it's going up, it's going down. The structures are not respected. We are having lower lows, lower highs, then we made a higher high compared to the previous one and higher lows. So in a very short daily term, we could say that gold is in a small uptrend structure-wise, but as you can see, we are trading close to the 200 moving average on the daily and still below the 20 moving average on the daily. And this is why gold puzzles me a bit as well. Dropping down to the 4 hours, let's see if the picture can begin to become a bit clearer. Okay, here we can see that we did have higher highs and higher lows. However, now we broke those lows, we broke below on the 4 hour. So now we could be back again in a downtrend structure. We have one lower low than the previous one. If that high remains, we would be having a lower high as well. And this is why I have two scenarios right now. If price manages to close above that purple area for gold, then I will be willing to look for the long scenario. And again, I would be waiting for price to come back up, come back down here, okay, validate my entry before getting to my long. So this would be for me the conditions and the price I would be willing to go long. If that scenario materializes, then I would be using my short, my stop loss, for the long here. And my target would be the previous highs or close to that descending trend line. Now, I could have another long scenario, which I'm aware of. And for now, that means that I'm not looking really for shorts at that level, at those levels. I would be willing, if I see anything below the 1750, 1760 area. Okay, if those lows are broken, then I would be willing to consider shorts. Until then, I'm looking only for long. So one long scenario would be this one. My favorite long scenario for gold will be the second one, which is a reaction here, okay, a drop, but without creating a lower low than this one. I would like to have the reaction before, so I have a higher high from here to here and a higher low from here to here. So I would like to see a retracement. That would be a deeper retracement till here. Then I would like to have a move back up, okay, with a strong push, willing to close above the previous, engulfing the previous bearish candles. Eventually, it can get back down to my entry price before pushing back up, or it can also directly be triggered here as soon as price closes below and I have again a close above. But because we can be tricked with those closes just below, and you see, trading is never an exact rule game, okay? We do have, and this is why I'm talking not about prices, not about lines that serve as resistance or support areas, but I'm talking about areas, okay? So that can be a lot of things. Here we did have a break of that trend line, but still that doesn't mean that price is continuing up or will continue up. Okay, no, I'm kind of expecting a retest, and then I'm expecting price to find support on something else. Here, the 20 moving average should have provided a great support that would validate an up move from that level here. And this is precisely what I'm looking for my entries as well. Okay, so this is why I have two long scenarios in play. Right now, I'm not looking for gold to short it unless I'm seeing anything below the previous lows, which is around, let's say, 1770 mark for gold. Okay, so this was my predictions. This is my technical analysis for upcoming trading week. Thank you for being here with me. I hope to see you all next week. We will have a review of those predictions here, and at the same time, we will also have a review, a preview of my personal bias for next week's trades. Thank you very much. Take care.